Morning traders, welcome to the Traders Lab. I'm your host Tom B. Thanks for stopping by the lab today. This stream's about integrating bookmap order flow tools with auction market theory using the volume profile as a chassis in the intraday developing time frame. It's based on structured trades, and these are available to all of you at no cost in the Bookmap Discord TraderLab community. Hope you're all doing well. We have a lot of headline risk, of course, because of the geopolitical situation, the war with Iran, potential news, tweets, comments, high risk environment. I suggest all traders and those of you who have vetted trade plans that risk management is your job. You need to be here for tomorrow. Many of us get involved in FOMO, the idea of quote what you can make, and this is not a business of what you can make. This is a business of staying in business and then pulling edge out or yield based on a vetted trade plan. That's the focus of the Trader Lab, to help you build the business out in spite of random outcomes, so you're here for the next trade and for tomorrow. Trader Lab's about the business of trading, not the fantasy. So trading is not a get rich quick situation. I know all the Lamborghinis and all the stuff you see out in influencer world, that's all wonderful. But let's get real and let's build businesses and let's build sustainability. That's the idea of TraderLab. And to help you do that, there's a library of webinars that some of them up to 4.5 hours, maybe 5 hours long of real-time narration. I often get asked about that. I do not call trades. I don't believe in it. I do not. One second. I also have my news on in the background, so I'm kind of keeping an ear there too. I don't do that because what I do is not so material. Those of you who know me know I've been trading going on almost 47 years, professionally and otherwise. As a fund manager, a trading advisor, all that kind of stuff's in the public record. But what's most important is retail traders really are in a different boat than professional traders. So a lot of what I share here in TraderLab are things that I developed for myself after many years of dead ends. And most of us, because of random winners, are kind of trapped. And that kind of was what motivated me to start the TraderLab. I created it. And the reason Bookmap asked me to do it is they are familiar with me. They've known me a long time. I've had Bookmap myself and used it, I think, since 2015, maybe. Can't remember anymore. But it's a terrific tool. So when Bookmap asked me if I was interested in streaming, I had to really think about it because I'm a full-time trader. But the other part of that is I don't need to trade all day. And when you think about it, where's the best opportunity for trading? Is there a time of day? All these things are part of trade plan. You may find that the same trades show up at different times during the day, but if the volatility or the rotation start compressing, your risk may stay constant. But your opportunity may start compressing. The old concept, risk reward. So there's many elements to the process of trading, and many elements because of randomness that we have to deal with. So the idea of TraderLab is to help you sort some of that out. And of course, as they always say, past performance is never indicative of future results. You have to vet everything for yourself, create a plan, and accept the random distribution of outcomes. This is not a business of being right. This is a business of following a plan. That's where you measure right, wrong, not outcome of random distributions of interactions with the other participants. If we could do that, we wouldn't be in a business of risk. We'd be in a business of certainty. It doesn't exist. General disclosure: all Bookmap Limited materials, information, and presentations are for educational purposes only and should not be considered specific investment advice or recommendations. Risk disclosure: trading futures, equities, and digital currencies involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. Please remember, this isn't a trade calling room. If we get there, we talk. By the way, this is what the structured trades look like. There's 60 PDFs of these, library of webinars, and of course, a document section with a lot of great information, templates for trade plans, and much more. The TraderLab's a community of like-minded traders who come together to leverage their collective experience. So it's not about me, it's about you. I'm just your guide, you might say. So even though it's a chat that I created and all of that, it's really about you and the leverage of the community. There's a lot of things going on, data mining and much more, experimenting with AI, just a lot of things, algo development, just tons of stuff, and that's what makes the TraderLab special. It's not a one-size-fits-all, but it is a serious community, it isn't romper room, just so you know. So that's really not the goal of the TraderLab. TraderLab's about the business. So if you're interested in the business, you have an open invitation to TraderLab, and there's no cost for that. And if you're visiting in YouTube, good morning, thanks for visiting. Feel free to use the link. Okay? Let's get going. Now, I always like to start with the higher time frame, and needless to say, subject to what you call time frame. This is Investor RT. It exports levels to Bookmap, which you will see, and this is our all-time high, and I think we can say maybe the wind is blowing from the other side. What do you think? Now, this was an important level. Now, this is Thursday. What you can see is the market rotates. So the market goes down to go up, squeeze, then goes, and this is where the squeeze is. Shorts have stops here, here, here. Squeeze. What do? We get these guys out, any shorts, and we get our continuation selling. What do we get here? We get shorts and a squeeze. We open higher. What do? We get the stops here. We fail to get the stops there, and then we get our sellers. Then test south. Now, let's watch. This is yesterday, or I should say Friday. A reminder, everybody, markets will be closed on Friday in observance of the Good Friday in front of Easter. Hope I got that right. So there will be no stream on Friday. I will miss you all. And the other part of this is, let's look at statistical ideas and probabilities. One of the things to always, and we have a gap here. Now, what was interesting is on this day, just to give you some idea, lower outside of range we opened and outside of value, this little yellow box is value, there was a 67% probability, and we opened, I don't remember where, somewhere down here, to fill the gap, which we did. And I believe it was a news event, negotiations are ongoing, whatever. And of course, that was a great opportunity to sell. We filled the gap. It created a squeeze, which also set up the shorts. Then the gap. Now today, I'm just going to tell you my plan. Doesn't mean it's a good one. It's just a plan. The market is short from Friday, the Acapulco cliff dive. And we have a high volume area here. This is the profile. In other words, this is showing us where high volume is, and if we can get under Friday's low, the next area would be around 75, 77. Not recommendation, it's just auction based. But when I came in today, given where we were opening and that the market is short and we have a gap and we have shorts in here, my initial idea was longs to squeeze and get the stops over yesterday's high and then trade into this gap, maybe fill it, no clue. Okay, not important. What is important is just following the plan, and then, as they say at the casinos, let the chips fall where they may. And why would I say chips and all that kind of stuff? I'm referencing casinos because we're in a business of gaming. So you have to remember that. We're not in the business of being right in the sense of outcomes. We're in the business of sampling the market at vetted locations that have statistical probabilities. You have to remember that. It's not a business of predicting or being right. I know we're kind of oriented towards that because we grew up here on planet Earth with getting approval and getting the answers right in socialization, in school, getting approval from parents and the rest of it, so we are wired to seek things that we have been conditioned to seek, right? Well, this business is the opposite end of the spectrum. The only thing that's right or wrong in this business is following a plan and also accepting the randomness. It's very different. Now let's look at today, where we are today, and what's the possibility of today? Well, I started out with the idea of longs, and you'll see that didn't turn out so good. And then I had to turn around and get short. And even then, it's been, for me, not the best experience. Things that just the volatility and the rotations have been a bit extreme. So it's not a wonderful experience for me today. It happens. It's just part of it. The thing to understand is it doesn't matter how long you've been trading. What matters is statistical probabilities, and if the condition of the market is not in alignment with your plan, or my plan, not yours, then I'm going to take stops probing for location. And if I start moving in the wrong direction, that's the way it is. And if the condition in my plan cannot get aligned, what's going to happen to me and what happens to everybody, and it's happened to me forever, trading 47 years, is condition of market and plan not in alignment, I pay. That's the way it is. So don't mind telling you that, because there is no, quote, holy grail. If you're still looking for that, let me know if you come across it. One moment, guys. So we're in a rotational market, and it's very two-sided. Now, here's something else I think. Let's say I think. Okay. These are called volume points of control, naked volume points of control. On this day, we value, this yellow box is called value area. So on this day, this is where 70% of the volume took place, and the highest volume, or retail price, think shopping, that's what the auction is, was here. That suggests we cut off this auction, and then we were going to continue the next day, and then we got the gap. And again, the possibility was to come back and check this price or not. Now we have a naked volume point of control at 91 quarter. So part of this was, if this was too low, think of it as a retail price from the last time we were here, then we could bounce off this and come back, fill the gap, and check here. So initially on this day, I was thinking that, well, if this is too low, we'll at least come back and squeeze these guys, and then we'll see. Didn't do it. So now this is too high, and this is a high volume area, which is the same as this. This is high volume. Let's go up in time frame. This is high volume. So this was the target coming down for Friday. And then today, if we can get below it, our target becomes 77. In other words, outside edge, and then potential to come back. Well, because of the range and the gap, it is possible to have an inside day. So that's a possibility. In other words, just two-sided trade. And remember, the market is short. That means there's buyers built in. And if we get sellers in here and we can't come out, we just can't continue, then we can rotate and then eventually, potentially, squeeze these sellers out. So I posted this in TraderLab over the weekend, actually, and this morning. Just be aware. It's market mechanics. Market goes up to go down. That's why you get things like this. Market goes down, squeeze. Shorts come in here, take this high out, squeeze, then down, down. So we haven't squeezed. So we have to be very aware. Anyway, none of these are recommendations. This is the condition of the market. It doesn't tell us what is going to happen and where. So your trade plan is the next piece. So my first trade this morning, actually it was more than one, was longs. Now you're going to say, well, the market went down. Well, at the time, my plan was squeeze. And here's part of why. The fair, let me see if I got this right. 64. One moment. Yeah, 64.61 was where the high volume was on Friday. So let's think of this like a fair or retail price. The overnight volume point of control is the fair or retail price from the ETH. So what I know is I'm above Friday's fair price, and I'm open, and this is just before the RTH open, okay? And this is going to be the RTH open. So I'm looking for continuation sellers and the short squeeze. So now let's go take a look. So I'm going to show you my first trade. I felt it was pretty aggressive, but you know, you just got to do what you got to do. You know, it's just kind of the way this thing works. So this is my reference for what might be too low. I have a sweep, I have absorption. This is called VPOC migration. Now, when I was taking this trade, I'm thinking, you know, this is pretty aggressive, you know, but it's my plan, you know, so I just take the trades and kind of just let it do what it's going to do. So let's look. This is called the variable high volume node. I'm going to show you this. And then things got really kind of turbulent. So what I'm looking at here, now the way I tend to work, and you have to vet everything for yourself, is the way I was thinking about it is if I can get selling, then I have buyers in here, and then I'm going to have buy stops above this, the opening swing high. Okay, so my plan was to come across and squeeze, okay, and continue, you know, just take everybody out, and substantial abuse for the shorts. And as we can see that we had a little challenge. And I have to tell, I don't mind telling you this, because if anyone isn't giving you the straight oil from the can, I mean, what the heck, right? And I always say I take stops, and you don't want to take mine. You know, I take them, and you know, in hindsight, just like you, I go, gee, that was so obvious. You know, it's not obvious, because at the moment you take this, it's 100% random. It's always 100% random. It's very important you understand the business you're in. You're not in the business of prediction. You're just in the business of sampling the market. I had to change that for myself mentally many years ago, because I was hung up just like you about being right and knowing what's going to happen. And it took me a long time to understand that that's my psychological need, you know, to avoid pain, avoid risk. And I'm wired to think that way because it's what's created survival of the species. If you want to think about it, is there a saber-toothed tiger behind the rock? What's going on? Let's be sure. Because of the risk and the potential pain. Now, when we take stops, we are conditioned to avoid pain. The primal wiring does not understand the difference between saber-tooth tiger and a stop. It's pain is pain, right? So just so you kind of think about it. All right. And if, boy, I have data. I don't know what's going on over here. Oh yeah, I had a little power surge right there. That was exciting. You know, this is like, I'm back in Chicago. I'm not in Costa Rica. And this is the same thing like in Costa Rica. It's like, what? VPOC migration. So I'm watching this, and I'm watching the VPOC because you know I have something called the VPOC migration trade. So I'm looking for where's this outside edge. Now I'm at a key location, and what I am looking for now in the sheet that I share in TraderLab, we are opening in range, and maybe you might say in value, maybe. The market's in balance, so what are we anticipating? Maybe a low conviction or rotational day. So the question then becomes, are we going to break out of yesterday's range, and what's happening? So it's two-sided, and this is something where you have to kind of determine what's happening. So we can have a neutral day, which means we take out high-low, about a 30% probability. By the way, high low, first hour high low. Statistically, if we're opening higher in range, taking out the first hour's high low is about 98% probability. Taking out the ETH higher low, 97% probability. Taking out the previous high or low, 82% probability. Taking out the ETH high, 76% probability. And taking out the previous point of control, 68%. 68%. See, so I start out with these statistics in the opening context that we are leaning to the long side. Now, while we're in the statistical lean and the rotational lean, so everything was saying up. Now, the problem, of course, is if, like, in other words, will it, when, so it's when, if, how. Completely random. So my trades, because of these statistical probabilities and knowing the market is short and we have a gap, longs, except, and you'll see why. So I'm looking for my first trade, and this is an aggressive trade. I made these up for myself. You have to vet them. There is no plug and play. Sorry. Right? And if you've been doing plug and play without having statistics, you're just playing a video game. And I'm going to encourage you not to keep doing that because you're going to have a good time. You're going to have random winners, and while you may be the exception because you're special, most of us aren't that special that we can not play the business for what it actually is, which is a business of edge and random distributions of outcomes. So I want to encourage you. This is my target down here, and then I'm looking here, and now I have VPOC migration. So I have a couple of elements now are coming into alignment. This and the developing volume point of control. What this is as the market in real time is auctioning, it is monitoring the volume. And what I'm seeing is too high, I'm not paying that, think shopping. Too high, break low, VPOC migration. What it is telling me, there's more volume taking place here than above me. So what that is, a shopping experience. It's basically saying, I'm not paying that. Just translate this as language. Trading, or at least reading the auction, is not indicator based. It is a language. So think of this like foreign language or a musical instrument. Just think of it that way. Okay. So now new retail price going to zero, except statistical probability. And what was that? Getting there was 68% probability. And then we go from there. Okay. So, and I got to show you, just before I go further, and remember, these sellers, what do we have above here? Buy stops. So let's think of this in many time frames or multiple time frames. If the higher time frame is trend down, okay, and the market is currently short, and I get continuation sellers over here, right? So, and what's in this leg? Buy stops, and where are they? Here. So any longs I take, I'm going to look for the buyers up here and then north. So I'm looking now for absorption, and I'm looking to cross over this, which sets up back here and then out the top. That's the trade I'm looking for, and I'm sticking to it, and unfortunately or fortunately, whatever happens, happens. I take a long right here, very, very aggressive, and actually I didn't get scaled here.
Trade in context.
There's my scale. So I'm going, I got you now. And where am I trying to go? Let's remember where I'm trying to go. ETH high, statistically speaking, 97% probability to take one of them out. I don't know about you, but I'm leaning this way. ETH high on its own in this condition is about a 76% probability. You got to vet those for yourself. So I got my point of control, 68%, and I'm going for this. Can you see how I'm using the statistics? So anyway, this is where I'm doing my thing. I hit this liquidity up here, and as far as I'm going, so far so good. So risk neutral. This is a trade for me, and teeth chatter. And of course, I feel pretty confident. Now, confident doesn't mean predictive. It means where's the stops in this leg? Well, it's going to be here. So I have a pretty good shot of going there, don't you think? Anyway, that's where it started. And then things got weird. Watch. I got taken out here. So let's look at this. And I actually, when this happened here, so this is the target, don't forget, and this is the obstacle. I bounce here, I break low, and right here I test it. And this is where the teeth start chattering because this is resistance. I've got sellers here, and these sellers, this is the limit order book, the heat map, they absorbed. So I'm thinking to myself, well, okay, I can get the rotation, more sellers, and let me try to show you this. And this variable high volume node, don't forget, this was the trade. So I have overnight VPOC, variable high volume node, and so this is like support for me. So I know I have the VWAP here, and I'm thinking, well, come on, VWAPers and mid buyers, let's go. Resistance is here. Okay, so important area, overnight VPOC. So everything is okay until there, not so good. So now I break low, and I have a single in here from when we came down. So I'm looking at the single, and I have resting liquidity. So right here, I went and took another long, and now I'm looking at it as mean reversion. So I came out to a low volume area right here. This is a trigger against the liquidity, and the idea of this trade is to come back here. So still, at this point, still on the longs, okay? Got stopped out. There you go. So there, it was very exciting. Now I get VPOC migration. This suggests there's trouble. So right here, for me, so I ended up a scratch, well, not quite a scratch, but reasonably call it a scratch because I had some, good. So this is a profitable trade. It's just, it is what it is. I don't think too much about it. So we have one winner, one stop, and now trouble right here. So this I took as a long mean reversion, and it's all because of the lining up of these locations. When it failed, that told me, and this. So at the time I took the long, this was still here. You see? So this is my reversion in alignment with this. I just want you to see how it all set up, and at the time this is what it looked like. Okay, so location, think real estate, and this was what I was looking for it to do, right? And don't forget this, none of this is here. So fell down, and I was looking for it to rotate, didn't do it. So I go, well, that is very interesting. So now I get VPOC migration. This suggests to me this is too high. I got trouble, and I've got to figure out now. I'm not in alignment. I don't tell myself I'm wrong because I'm following my plan, and I always have to check with myself. What's going on? So this says out of alignment. So now my context has changed, and now it's moving away from me. So now the teeth are chattering. I am experiencing psychological noise, FOMO, right? By the way, I feel FOMO. I talk about it because we're wired. This is no different than your dog sees a squirrel or a pigeon. I grew up in Brooklyn, New York, so we had pigeons with oil slicks around their neck. If you ever look at a pigeon, that kind of glossy thing. So anyway, this is where I had a sweep. You see, I had elements, and elements. So, and all these elements for this, and this is where it broke the other side. So this for me is a stop, okay? And then run away. So now I don't have a short, and I'm fomatized, right? So let's watch. Now I do get short, but I'm going to show you where. And I'll tell you, I wanted to hit myself with a 2x4 a couple of times. This is all emotional stuff. Now, this is a variable high volume node. Remember, I've created what's called VHVNs and VPOC migration structured trades. These are all available in TraderLab. And what I try to do, and I want to emphasize try, is just get an alignment, wait for the trades to show up, put the trade on, as long as it qualifies based on my plan, manage my risk, and as they say, let it go from there. And I'm clueless. So let's watch. So I'm just showing you structured trades. And those of you who are visiting, what I do is not complicated. But what I also do is random. You do too. So we're all doing the same thing. It's just, can you do it in a location that makes sense? So this is resistance for me. And here's the way I look at this from a language point of view. First of all, this is VWAP. I'm not a huge believer in VWAP unless under certain conditions. I do not trade the mid unless, in other words, if I have a trade at VWAP, it's incidental. If I have a trade at mid, it's not because a line on the chart. I don't trade because there's a line on a chart. Just like if you draw a trend line and you keep moving it, what does that tell you? You got to start thinking about this stuff. A line on a piece of paper or on anything is not material. We are trading participant behavior, not lines on a chart. Now there's a line on a chart, but why is it on the chart? Because this is the high volume or retail price. Think shopping. If this price is too high and the buyers will not pay it, now the new retail price moves lower. So what we're in here now is a directional market, okay? Now, how do I trade a directional market? Again, you trade your own plan. I'm not saying I got a good plan. I'm just saying it, tends to work over time. Because if, again, as I said on the top of the stream, if the rotations and the conditions of the market don't align with my plan, I'm just going to take stops. So I know this is too high. So I'm looking for what's called mean reversion. So I have no way in to this other than the lunatic is yelling, get short, get short, get short. Hey, well, let me actually show you. There was another trade here. Let me try to find this. Yeah, here it is. I have a couple things here. This is a short. I made this trade up. It's called a VPOC migration trade. I get a buy sweep here. This moves down. Currently, right here, we are rejecting this price. VPOC migration trade. This could have been a short if I wasn't long here. My jaw's on the deck, so I get stopped, and then I'm reconfiguring, my plan now. So I didn't get short here. None of that. And then we came down here. So this is where the FOMO kicks in. So I just, grunt and, have a couple other choice words like you do, and now I get my next trade. The VPOC migration trade. So this sets up a short here. I get scaled. I'm going for the test of this for the next scale, and I got taken out of that one. So now, but this is what's important here. It doesn't matter to me I get taken out. I'm just following my plan. But I'm also getting a little, frustrated. Now that's emotions. I always want to talk about my emotions because nobody talks about it, right? Well, the thing about emotions, it's wired. You can't stop them. I spent years trying to stop it, and those of you who are trying to be, I'm not going to make that error, I'm going to be, and then you don't, it's not, your intentions are good, but you don't understand the process or the mechanism in your brain and the chemicals that are released. In fact, in TraderLab, there's a book, and I can never remember the name of this thing. I think it's somebody tell me the name of it. If you're in TraderLab, because it's about a thought process, the impulse, and then the right thing to do. So the impulse is just wiring, and you have to, it's like a wave that washes over you, but you need to recognize it. So anticipate it, recognize it. TraderLab, what's the name of that book? Thinking Fast and Slow. Thanks, bear in mind. The name of this book, and I recommend it to everyone, and a lot of this information is in synopsis of these books are in TraderLab. Just bullet points, you know. And if you're interested in that, it's available as well as a library of webinars and, of course, a document section, trade plan, templates, and a lot of things. Because remember what the TraderLab is. It's a community of like-minded traders who come together to leverage their collective experience. So that's really TraderLab. Anyway, this is a short, and there's a sweep. This is a trigger in TraderLab, and then it's see you later. We're going down here, and then not so much. So now, this is all alignment with shorts, and even this changes my plan right here. My plan is still short dominant, but now I'm looking for outside in. This is called mean reversion. So I'm switching now from a directional continuation mode to a reversion continuation mode. In fact, the webinar or the stream I did on Friday, I got a lot of feedback on that because it was about trading a trend, but continuation trading. In other words, if the market's directional, well, how do you get involved in a directional market? Our impulse is, oh, it's running away, and all this kind of stuff. But we have to understand what change represents. This is where change comes in. When we cross, you'll notice we haven't crossed over. We kept breaking below the retail price. See, so it's directional with counter rotations. When we cross this, now we're in something called reversion trading, a whole different plan. Now, how do you trade reversion? Well, this is part of the thrill. Now, what is reversion? Reversion is when the market balances, and if the high volume is here, so what we know is right now this is too high. We have our VWAP over here, but here in the auction is what's important. This is an outside edge, and this outside edge is created from this. So when we were here, it was like, what's happening? And we broke away. That says, I'm not paying that. So it creates an acceleration or low volume area. So we didn't hang out. So if we're hanging out, there's more volume here. If we chop or consolidate, there's more volume. When we break away, there's less. So what it does is, if you come over here, you'll see it's low volume. You see where it is? It's out here. So what do I know? Now, what I know means what might happen. So what I know is up here, too high, too low, retail price. If this is too high, think of this like a store. This is the auction. I'm not paying that. Now the new price is here. So if I cross over it, I can then be looking to sell it. And this gets tricky. It's called mean reversion. And I always joke it's mean. This is where we're trying to go, and we're trying to come out the bottom. And we had Powell, I think, at 9:30 a.m. my time, Central Time. So this is a short. Well, let's look at it. So for me, I took this, and my stop is out here. Okay? And the reason I'm taking this is because of this. Not because of VWAP or any of this. That's not important to me. I mean, it is in the sense of we have structured trades, VWAP to VPOC, but what dominates for me is the auction, because the auction tells you where too high is. I'm telling you, this thing is like making me nuts here. So anyway, trigger, scale, going for the low. Okay, that's so now I'm still on the shorts. Okay, because that's what's happening. And I'm looking for this. I had my buyers here. So my next scale is here, ahead of here, actually, ahead of the liquidity. And then I'm holding. And I have downside targets. And then not so much, you know. So I have a runner, and let me show you some outside targets here. Whoa, they shouldn't be in here. Sorry, guys. Let me show you the targets. They're not on here. Well, yesterday's low, of course, that would be sweet, but who knows? Let me get IRT back. So I'm going to show you some higher levels, not recommendations. This is today so far. You'll notice that we tested this. This was the reason for my longs to get in here to there. That would have been a sweet outcome, not so much. So now my targets are, these aren't recommendations, you have to vet it, to if we stay inside around 6405-ish, high volume node, and then if we get under here, 75, wherever. But we may just stay inside. So that part, no clue. All right. So, but this is kind of another way to look at this. If we stay inside, which we can, hold on. We don't have to go anywhere. We can just, this could be a collective abuse for everybody. So currently, it's a rotational trade. The sellers are still in control in the higher time frame. It's two-sided trade here. The caution I want to give everyone, and not a recommendation, is the market is short to the gills. That sets up potential squeezes, and if there's any kind of news input, it could be rather substantial response and short squeeze. You always have to remember market mechanics. Market goes up to go down and goes down to go up, and whatever, right? So this thrown under the bus, we get over here, we come over here, and now taken out, and now I see the squeeze. I'm under here, and I'm going to look to sell it again. Now my resistance, let me show you where it is there, and I'm trying to find an outside edge, because how do I trade a downtrend if I think it's a downtrend? I only got one way to do it, and this is the primary trade I suggest everybody learn and vet and make a plan, because it's the condition most of the time in the market, and that's rotations, reversion trading. And there's plans posted in the TraderLab that have been shared on how to vet reversion. So, and we have to remember the market is short. So let's watch VPOC migration. What does it say? Let's come back to the language of the market. Too low. Now, when this happens, don't forget I'm trading reversion. You see, I'm going rotational trade. Anyway, I got taken out. Very exciting. So this is where it's kind of like, I feel like you're flying a plane through turbulence, because it's very turbulent. So right here, let's look at behavior. We know this is resistance because why? The language, it was too high. I come up to it here. I have a sweep. Location, outside edge, same trade, right? Take a short here. Get risk neutral, trying to come, and it's 9:30. I've got the IB stat over 98% probability to take out first hour's high or low. I think this might be the one to go for. What do you think? I don't know. There's my sweep, there's my trigger, there's my location. This is reversion, and then looking for that. Just saying. And taken out. So now I'm still under here. I'm coming across these VHVNs. I get the sweep. I'm at an outside edge, just showing you. Take a short, trying to come back here. Scale, last trade. And that one's still in the piggy bank. Notice the behavior. Sweep, sweep, location, location, think real estate, and back here. This is mean reversion. And I'm going to tell you, mean reversion, what's hard about mean reversion is trying to get the outside edge. Was this the outside edge, Tom? What about this? Was that the outside edge? Reversion. Squeeze. If I get over this, I got the next one up. You see me do this every day. This is what I built for myself. Because when I started, and I don't want to spend time, you guys know about me. I'm doing this 47 years. When I started out, it was all about prediction and being right, and I didn't understand the idea of randomness. I wanted to create certainty because I don't want to lose. And what is losing in this business? It's not losing if it has an edge. It's a sample. Low volume node is here. So I know this is an outside edge. But what else do I know? This is too high. You see, if I blow through this structure, then I have the next one up. It's so simple. But what's not simple? Randomness. Kiloton, how you doing? And Danish popcorn, you're conscious? Very positive. By the way, if you're visiting in YouTube, please give a like. I also suggest you guys who are looking to learn continuation trading, in other words, the counter rotation comes and you're taking these things. If you understand mean reversion, this is specifically reversion trading. Now I'm going to take you just down into an idea that you may find compelling. Maybe. Let's look. I got to turn some levels on. Give me 1 second. One moment. Sorry, guys. It's kind of when you got all this stuff running here. Oh, by the way, guys, if you don't have a squawk box like we used to have on the floor, or just a news source, there's free news sources, live streaming with a 10-second delay. If you can't afford one or you just want something, financial juice, everybody ought to have news. We are news driven. Now, the thing about news is we cannot react to news because we have news reading algos. We can't do anything about it. But by the time we know somebody says something, like Powell, you know, it's by the time you hear it, even if it's 10 seconds, the market's going to be over here or whatever, you know. So news for me, I'm okay, because by the time I'm conscious of something happening, I'm either out or things work or whatever it does. So we don't trade the news, but we need to be conscious of the news. And if any of you are in TraderLab or wherever you happen to be, news. You got to have news today. You should have it every day. It's just part of trading. So what is this? If I blow through here, right, I come to my next level. I was going to show you something interesting. Sweep, trigger. Let me get you into microstructure now. So you understand what I do, and again, you have to find what rhymes with you. This just works for me, and I'm not saying you should try to replicate what I do. It's just something that you can learn, and then you can adapt it. There's no, when I'm asked a lot, what's the right way to trade and all this kind of thing, I'm going to say is time frame. In other words, what rotations do you trade? What is your risk reward? For me, I probe the market, so I take stops. Surprise, surprise. Do you? Do you think anyone doesn't? I take them, and there are days I take them, and I'm wondering what, I mean, emotionally, I go, what am I doing wrong? You know, this is like the question we ask ourselves because we experience this right wrong. Yeah. Well, if I'm following my plan, I'm winning. It just is a random sampling of the conditions that give me edge. You need to have this in your plan and in your mental preparation. You got to kind of run scenarios through your head. You know, I'm going to feel this. What am I going to do about it? When I feel this, here's what works. When I feel this, don't respond to FOMO. You will feel FOMO. When you have a loss, you're going to want to make it back. Revenge trading, all this kind of stuff, you know. So, by the way, I'm getting a question here, daily maximum loss. What's mine? It's based on account size. So, my percent loss, I mean, uh, you know, if you come to TraderLab, there's information there. Van Tharp, who's kind of known, I guess, as the statistical guy, you know, on risk, probability of risk of ruin, you know, what do you need so you can take a string of losses and still come back, you know, how do you size, all this kind of stuff. That's available in TraderLab, and the real answer to is what your maximum loss limit is really a percentage. And if you only risk 1% of your account or 2% of your account max drawdown, you have a good probability of recovery, you see. But most retail traders are focused on greed, FOMO. They don't understand the business is not about today, it's about every day. So you might, if you, so that answer, I hope that gave you the answer. For me, if I hit a certain drawdown, then it's not that I've done anything wrong, and I have to remind myself of that. It's that the market condition is not in alignment with my vetted edge. That's all. So if I don't, my edge doesn't show up, that's okay because it can't be there every day, though it tends to be there almost every day. But there are some days where it's just like I feel like I say, like today. You know, it's a day where there's a lot of volatility. So a lot of news risk and all that. This is a short. Let me show you this. So I have liquidity, which is limit order book. I have my icebergs, and I have a sweep. Sweeps are really nice. I use them. I share in TraderLab how I use order flow and combinations of elements. And here's the other piece for those of you who are so excited. Outside edge. You know, where's the outside? This is the mean reversion. And the mean reversion is mean. So when I coming out here, I don't know where it's going, but let's look. Microstructure, sweep. You see this right here? This is a microstructure. It's an auction. So what happened here was I swept the book. I interacted with icebergs. There's the sweep. The sellers are now below this volume. That volume is sitting there. Can you guys see that okay? I don't know. You know, I have a large monitor here since my streaming computer went south of the border when I was in Costa Rica, and I still haven't replaced it. I think I better hurry up because my understanding is computer prices are going to skyrocket. You know, there's shortages of everything, and with inflation, you know, as they say, you ain't seen nothing yet. So this high volume is the same as this high volume but shorter time frame. That's what I'm trying to say here. So this, if this is too high in the store, I leave it. My sellers are below here. I can sell this, or here's the other part. Let's say I'm asleep at the switch, which is always possible. What do I know about this? If I'm above it and I break below it, I can sell it. More risk, but I can sell it. So I can sell this if it's in my plan. If I'm asleep and I break below this, I can sell this if it's in my plan. Not saying it's a good idea, I'm just saying it's something, right? And what do I got over here? This was too low. This is a scale. So I can sell this if I understand it. If I don't understand it, then I have this one. And I can sell this. And then I have this. And then coming down the food chain. So I kind of trade these things sequentially. And then down to here. And then it would be out the bottom, you know. This is what's called mean reversion. You see it? So this is a structured trade. This is a bit more advanced, I would suspect, but you could, anyway. And notice the alignment here. You see where this is coming from? So the hard thing about mean reversion is where's the outside. So that's the part we have to struggle with, okay? Yeah, Tillotson, you said premium. You mean I have to pay for that? I always had a squawk box, a floor squawk box, back when we had the floor. So, and then I also had my own guys on the floor that I would be talking to. So, who would fill paper for me. So, it was different, So, if the institutions were in there, because we knew who the filling brokers were, for banks and hedge funds and who would move. So, that's a whole thing that we don't have today. So where's our resistance? So remember this trade here. So it's either this or this to there, right? Resistance to there. Break high. Where's resistance? There. Where are you trying to go? Back to there, back to, you see? So this is just rotational trading, and whatever it does, you see? There's your sweep. So if you take this, you'd get risk neutral. If you don't get there, you get taken out. What do you know about this? You'll notice this is now resistance. You'll see the liquidity, how it comes back in. Again, I'm getting a little advanced for you, but I'm just trying to show you structure. When you do replays, these sellers who stop the market here, you see them come back in here. This is order flow. If I know the sellers are starting to line up again, why are they lining up? Because they want to sell this price. If I come up, I know right here, I got my sellers. I get a sweep here. So I see my sweep. Notice what's similar. I have a sweep. I have resting liquidity here, and this is where things get nasty. If I want to sell this, this is a trigger. I can sell this. Does this look familiar to that? And that. So for me, not a recommendation. If you vet this, you can sell this thing with a stop over there, and you have to vet it. Now, I'm streaming, no bueno, but these are trades I take. I don't even think about it. It's just my plan. Not saying it's a good one. And where am I trying to go? You see the repetition of these? So what I'm trading is I'm trading rotations. I'll get stopped out and thrown under the bus with you. We can all, go to the clinic for rehab after that. Sell this to there. Sell this to here. Sell this to there. Not so much, but scaled, you see. Sell and then blow through this. I got to look up here. If I break here, I can sell this. My stop goes there, and then I'm coming back there, and here is where I'm trying to go. VPOC migration. Got to be careful right here. So if I come out, I can come back. It's still reversion. The rotations are the variable in reversion. When it rotates out, we're trying to come in, and we have over 90% probability ish to take out the first hour's high or low. Where do you think I'd be going? Where is that thing? Anyway, that's where we are. Now, let's get into real time here. And again, guys, these aren't recommendations. I don't call trades. Why take my stop? I take them. So today is okay. But I will tell you that it was a bit weird for me But what it's telling me is you have to remember what happened on Friday. That's a breakaway gap. Andre, I'm just trading reversion. I don't have any other trades that I can operate in the condition currently of the market. So for me, it's in fact you should Andre. Andre's in TraderLab. Andre, I don't know if you watch Friday's stream. It's trend trading. I think mastering continuation trade, something like that. And all I concentrate on in a trend, I only have that I share in TraderLab. Let's just say structured trading. What I've tried to do for developing traders is give them the benefit of, let's just say, the wear and tear I went through um, to develop a trading process. And unfortunately, I spent too many years trying to fix a defective process. I'm just telling you about me. Um, and and in spite of winners, you see, I consider that the real problem for retail traders is all the winning trades you get. Um,
Lunchtime shop.
and you're going to say, well,
Lunchtime
isn't that the
shop.
point? No, it's not the point. The point is statistical edge that favors you. The winning trades are random. You see, edge is what pays you, not the random winners. Gamblers, you see, have winning hands. But let me ask you, did they walk out of a casino uh, profitable over time? No. They have random winners, and that can be nice. But is that, as a gambler, do you want to sit on the house side of the table or do you want to sit with the gamblers? Who do you think has a better opportunity? I'm going to suspect that statistical probabilities and edge is where this is what the business actually is. So if you're going to be in this business, you got to solve for what it is, right? Not try to make it, comfortable. Uh, I build systems. And I don't really want to spend time talking about myself anymore. If you follow the streams, you already know about me. And there's no holy grail. There's no secret sauce. Nothing. Trading is not predictable. It is random. So all this about being right and all your attachment, you're on a different planet, a different rule book, a different environment. We have to solve for this environment, not try to mold it into the environment we're familiar with. Does that make sense? Yeah, Alan, I don't have the premium financial juice anymore. I don't need it. I'm pretty much, by the time news comes in, the market's already going to respond to it. So, if I have a trade on, I get taken out. I'm going to get taken out. I'm not. I'm saying everybody should do what they are comfortable with and what they require. Um, and I'm not saying anyone shouldn't have real time news feed. I just don't need it. Used to have. I had it forever. But when the technology changed and the algos, uh, we had the algos come in, basically news reading algos. I can't do anything with the news until after the fact anyway. So, because the market responds immediately to it. So I don't know. Up to you. I mean, it's not a big deal. You should have the best tools you can have. And if that tool gives you edge, then by all means. It doesn't give me edge because I trade locations in the auction. So if the market squeezes on news, I'll see the bullet go off and I'll say what happened. But the news is going to be after the fact, and I can hang out for 10 seconds. I'll be there picking my jaw off the floor if I get squeezed out. But right now, this is where I'm looking to go. Not a recommendation because of statistical probabilities. And I still have to be conscious of a potential squeeze. That never changes. It doesn't. But here's the other part of it. What's the context? Higher time frame is down. What did we not do? We were not able to squeeze the shorts. That's pretty important, right? That says my plan for this morning was to squeeze these shorts. and get to the ETH high, and maybe you see everything for me was the long side. So when that doesn't happen, then you got to turn the barge around. That's what I call it, the barge. And the reason it's a barge, or like an oil tanker, basically, because I don't. It has to tell me that now the condition has changed, and that's why if it runs through me, I don't chase it. I then have to grab myself, and discipline myself because of the FOMO. Then it's like, okay, what do I know from my experience? The market, most of the time, is, even if it gets directional, is going to counter rotate. And the reason it counter rotates is because in these legs, there are buy stops in here. So the shorts in here have buy stops, right? This is the premise for the squeeze this morning. The shorts from yesterday, and we have a gap, right? There's buy stops up in there. So logically, the possibility existed that we would abuse some of those. Well, we didn't. So that's pretty informative, right? So then when it runs away and the sellers take control, and now we know the longs have failed, then I don't have any other way to trade it except outside. So that's what I'm showing you is the reversion trade. And the reversion trade is the trade you're going to see most of the time. Most of the time the market rotates. Even if it's directional, it still counter rotates. So you can kind of depend on that to show up. And I have these streams I've done, and they're available in the library in TraderLab. In fact, Ned, thanks for curating that for us. 4.5 hours long of reversion trading, which are really trend continuation trades. So how do you trade a directional market? For me, I can only trade outside it. That's it. I cannot, I don't have another way to trade it. So I just wait for these rotations because I know, and the reason these rotations happen is because if the market in any time frame gets too short, think of it like inventory, then we can rotate back over these guys. But currently, the short is, we're looking for this, and then I have to come back to my targets, which are not on this one. This is not my where I trade. So we're looking for 05, that, because we are above it. And we don't have to take this low out or the high. We can have an inside day. We got a lot of range here, guys. When you have an outsized day like this, it's possible to have an inside day. I mean, look, we had one over here, you see, inside and then pop. So this is still on the hit parade, this gap, and we will potentially fill it back, fill it up, fill it in, and get these shorts out. So, and then if this closes down today and we're inside, then we can, then you just got to be aware that now you got shorts, and then possibly shorts. So that sets up even more potential for squeeze, and it never has to. It's just part of the randomness. So I'm very, very, very aware of the potential to squeeze. So that was the basis of my longs, and now I have no longs. Unless things change, then it's like turn the barge around again. Is everybody with me? So here's the targets. Not a recommendation. 405-ish in here, or 6,400, just an area. And then if we take out yesterday's low, here's what can happen. If we get under yesterday's low, we may then squeeze and come back in, or we come down to 77-ish. I couldn't tell you, not my job. And the reason I can't tell you is because I have no idea. Let's take a look over here. Let's come back here. So what we know now is the buyers are here. You see them? The buyers are here. Here's a sweep, suggests counter rotation. So we're in a rotational trade. And for me, I have no longs, not a recommendation. I always have to say that. It's part of, why I don't do certain things like call trades or trade live for you guys. I come out of I was regulated, and being a CTA and all this stuff, an advisor, and managing a substantial amount of dollars at different times, uh, I learned very directly about compliance and risk. And I understand that there's a lot of YouTubers and influencers who call trades and do live trading. That's all their business. It's not mine. Um, Nobody understands the regulatory environment and the liability that those behaviors create. Uh, and after doing this for 47 years, you might say I'm rather risk adverse in certain areas, not in trading, but in the things I do. So in TraderLab, I share what I do, but I know what I do may not fit what you need to do. A lot of this is time frame specific. What I and the question I got is about risk. Remember, max loss percent R, right, Ben? Well, come to TraderLab, Ben, if you haven't. I haven't seen you there unless you're using another name. There's a lot of information on percent R, risk reward. So risk should be, let's say, 1R. And in this volatility, you got to have more R. But you can do it, and you have to adjust your risk or position sizing to fit the volatility or average true range. So if the ATR goes up because of this, the current, look at these rotations, then you have to adjust. Okay. So for me, if my 1R, might be 5, 6, 7 points in this market, I'm my other side of that 1R is to get risk neutral, and then I have to have the other part of it, my runners have to pay for my stops and give me a yield. So sure, I have to adjust. So there's a few ways to adjust to keep that based on the size of one's account, to kind of keep that risk within a certain percentage, which is maximum loss, drawdown for the day, and then you're done. And what tends to happen to us psychologically is if we hit a drawdown, the brain hide, as I call it, the lunatic is about revenge trading. They pick me off. I'm going to get it back. I don't want to be all this stuff. Guess what? It has nothing to do with the business. P&L is not what the business is about. So percent R is very important. When I'm putting risk on, I'm going for this. Otherwise, how am I going to be profitable? So instead of right, wrong, it's very much, here, we got to watch this right here. Variable high volume node. It's very much about statistical probabilities, which is what I'm always talking about. We need to focus on the plan and the statistical probability. So let's watch this area here and here. Let's watch this right here and see what happens. Not a trade recommendation. I've been asked over the years, to open a trade calling room. Why don't you do a pay room? People will pay, but that sounds like I have no interest in that. That's amateur hour for me. I'm a full-time trader. I have to, when I'm trading, I have to be in a zone, and my income. My income only comes from one place, and it's right here. So I have to just be very, intentional, try to support TraderLab. But the reason I created TraderLab was that everybody supports each other. I just can't be, I'm not a good multitasker. I don't know how you can be a good multitasker. We have a trader in TraderLab. His name is Furs. And he vacuums, feeds the baby. I don't know how he does it. And even when he's driving, he has, I think he can access Bookmap in his car somehow. I don't even know. But I find him pretty interesting. And he is a very high time frame trader. He trades, 70, 80 point trades. Now that doesn't fit my psychology. I'd lose my mind doing that. So these rotations fit my thing, you know. But when he can also give back large open trade equity, that might not fit some of you. By the way, if you are focused on percentage of winners, and I mean you, I mean the collective you, um, that's not what this is about. The business is not about how often you win. It's about the percent R. Okay. So if you don't understand what that is, come to TraderLab. We have a lot of material in there. Also, we have some excerpts and extractions of plan building and also building a mean reversion trade plan, which is, I always say to developing traders, if you can match it, if you can learn mean reversion, it happens in all time frames. What this is right here, guys, is this is a methodology, at least for me, I created many years ago. Now I'm sure there's many others now who do it. I learned market profile back in the mid 80s from Peter Stottlemyre. He actually created it. So I was very fortunate. And here's the other part of that. I was still running indicators back then. And I thought it would give me more. I didn't understand, and you probably have had the same experience, that more creates less. It's the opposite. More randomness, more random inputs actually creates just noise. It doesn't create edge. You can't measure it, you know. So if you can't measure something, if you have randomness on the input side, you have garbage, unfortunately, because you can't replicate it. And this is pretty much where we get into, oscillators, and we get into whatever, whatever you want to use. It doesn't matter. VWAPs and all this stuff. It has to be absolutely fixed to measure. Otherwise, when you put random inputs in a random environment, you can't measure it. And you're going to have winning trades. Remember, your trading toolbox probably has 200 indicators. So what's the deal with that? Well, they all have random winners. There's the catch-22. But none of them have edge. And I challenge anyone to show me one indicator that has an edge other than random winners. So then our natural thing is, well, if I put this together and that together, now it's going to work better. And we're going to still have the winners randomly. So this is the catch. Now, you don't have to accept this. I'm just telling you, I spent years trying to solve for that. And I wasted, and I didn't know I was wasting it, because when I started what I did, I was going to go down on the floor. I was brought in the business by one of the largest grain traders in the world at the time. And that's where I was headed, So, but the floor was not my thing, because the first thing I did is I went to the CME and took a classical bar charting. A guy named Ken Shaleen over there, and this is before the big CME was built. They had a little box. Look, it was a square building. It was down on Jackson, over the river, and that's where I actually went before the full CME building opened. So this is 1980. So anyway, I learned classical bar charting, and that actually hurt me. It didn't help me, because measured moves are predictive, aren't they? It's going to do this, it's going to do that. So I came into the business getting educated at CME with classical bar charting. We didn't have candles back then, and head and shoulders, pennant, boom, 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 whatever. So it was all predictive. So I went into this thing of prediction and being right and knowing. I went down that track, and what I kept trying to do was add more elements to stay on that path. I hope that makes sense. Anyway, turned out that was a lot of lost time, because I kept having those winners. And then to solve for that, then I went into system building. So I took the same ideas and then extrapolated it into systems so I can optimize those random elements, you see. So I went down that path. I just want you to know what I did. And but this is years. So I kept trying, and this is in spite of winning trades and everything. So I ended up in a schedule of re-optimization. It was like walk forward testing, take a chunk of data, but I was always behind. Now this is position trading, don't forget. I was managing dollars across asset classes and with these large portfolios that were distributed. So I could do pretty well because of the spread, and I don't want to waste your time with some of this, but it still was problematic because to try to quote fix it, I was re-optimizing. So I was always chasing it from behind, and again, based on what was out there in the literature and the research that was being done, this is how fund managers and stuff were doing it. And a lot of this was I was started this CTA, so I was managing money, and I thought the way to manage across asset classes was systems. So it still was problematic. So I had to start moving away from that, and but I don't want to waste your time hearing about me. I just think it's kind of interesting because I'm talking about you. The reason I bring it up is because we are the same. We are all looking for something that doesn't exist in this business, and maybe we can find it, right? So we hop the chats and the holy grail of this, and the only one thing you need, and that's just to hook you. And maybe it does. Here's the thing: if everything works randomly, someone can show you something that works. You guys have been following this stream. I've been streaming this, I guess, about 4 years or so. And I show you I take stops, but I also show you that I had to adjust my time frame to cover my stops. If I'm running tight rotations and trading in a fear state or FOMO or giving it back, I'm then going to cut off my opportunity to get the rotations that pay for my stops. And then what I'm doing is I've now skewed the R, or the expectancy, away from me and more towards my risk. Does that make sense? Anyway, I hope this makes some sense. Hope you guys, if you're finding something useful there in YouTube, that give a like, and be sure to visit the TraderLab. There's no cost for it. And currently you don't have to be a Bookmap subscriber to take advantage of it, but it is a serious community. It's open to everybody. And remember, there's 60 PDFs, and the idea of the PDFs, by the way, there is no plug and play, so we got to get over it. What there is examples, and I put these together, and some of this is research. I don't do any of this, but early on I was looking at some of the order flow tools, and these are back from 2021, some are even older, and because I was trying to work on developing add-ons with Bookmap, and some of this is actually now included in some add-ons, but it is also jettisoned. So anyway, you can kind of learn some ideas, but these are not plug and play. So if you try that, you have to understand where they are qualified. So for me, when the condition of the market qualifies the trades I take. When the condition changes, which I won't know till hindsight, then I have a different plan, or I have no plan. Or in other words, what I'm saying is we're in a transition, what's going on? And then I have to wait. I'm okay with that. And often when it changes, that's when I take stops, or my location is bad. It's just the way it is. Remember, it's not right, wrong. It's probing. Is this the right location? I don't know. I got a trigger. I'm at a location. I'm trading mean reversion. I'm now trying to find the outside. Where is it? Oh, good luck with that. Okay. Well, if I don't know where it is, how can I trade this? Well, if I sell this, I'm okay. This is support down here. If I sell this, I'm trying to go there. If it comes back here, I'm trying to go here. If I don't get risk neutral, I get taken out. I sell it from another level. Where am I trying to go? Well, back here, back here. VWAP, who knows? Where's my resistance? That isn't it. This is it, or this is it. Come back here. This is reversion. This is support. Break below it. What is this? Is this interesting to you? Break low. Test. Where are we trying to go? Here. This is called structured trading. Does this make sense? How are we doing in YouTube? Guys, I hope you get something from TraderLab. TraderLab's here for you. Unfortunately, there is no plug and play. If you want to be in this business, you have to find your groove. You know, you heard the term your groove. In other words, what aligns with you mentally or psychologically? This is what aligns with me. If I get short and take a stop, yeah, it aligns with me. How do I feel about it? Well, disappointed. What else? Do I sell this? Yeah, it's in my plan. Do I sell this? Yes, it's in my plan. Can I sell this? No comment. Can I sell this? Perhaps. Where am I trying to go here? Where's my 98% probability? It's here. And you have to vet this for yourself. Anybody have a problem with this? If you learn this, does anyone think if you do the work, vet it, and then develop the discipline because you have a proof of concept, is there any reason you can't build a profitable, sustainable business based on what you see here? That's what I'm asking you. And I'm not saying you will. I'm saying, is there any reason other than you, the variable, not being able to build a sustainable career path for yourself? Is there? Because that's the question. So the random winners, I coined a phrase for myself, and it's so long ago, Trader Groundhog Day. Work hard, wake up in the same place. I just got to work harder. Look at these winning trades. I just need more of those. Yep, sure do. So how do you get them? Well, if what you do doesn't work, first thing is learn from what you've done. It's almost like going to school, paying tuition, and then you repeat the class and you keep paying, but you're not learning. Learn from your experience. Extract everything. Don't let the random winners distract you from what the business is. The business is gaming. What is gaming? Only playing games that have an edge that favor you. That's gaming, right? That's what the casinos do. They seem to do pretty good. So they accept that they have control over what they do or how they play the game. And once the cards are dealt, it is completely random. When we push the button, if we have a statistical edge, the outcome is completely random. It's like sitting and putting a coin in the slot, but you have the edge versus the gamblers having the edge. You see? So you're still going to pay them. So mentally, when you rehearse in the morning before you put your first trade on, when you're preparing, you need to be thinking of it like cost of production and overhead, not win-lose. Hard to do, isn't it? But that's what the business is. If you want to learn the business of trading, you all have an open invitation to TraderLab. And as long as it's still available and there's no cost, and I just have to kind of caution you guys, when I'm streaming, I'm not trading. If I have trades on, fine. They already have targets in. They already are being managed. It goes on autopilot pretty much. But I'm a discretionary trader, but I am rule-based. Okay? Kiloton, you took a $5,000 payout. Nice for you. By the way, funded accounts are the gift, in my opinion, that keeps on giving, because it's like an option. And I'm not recommending them specifically. I'm just saying is I wish I had them when I started out, because for me, I had to write my check out. And I made a substantial donation over the years to the Floor Traders Retirement Fund as I was learning. And The random winners kept me sticking with things that really had no edge. If you don't have edge but random winners, you might want to visit TraderLab. Maybe it'll be a good step for you on your journey. There's no holy grail, but I think TraderLab is different, and the best thing to do, I think, is use the link in the bottom of YouTube. If you're not there, visit TraderLab. Ask in there. You know, there is no perfect solution. I'm not saying this is right for you. It seems to work for some traders. Other traders, no matter what they do, will not develop or do the work in order to know when they should trade, when they have edge, or when they're just playing a video game. Everybody's different. If you're looking for sustainability and willing to do the work, and of course, there's never a guarantee of an outcome that you can create sustainability, I invite you to TraderLab. And again, there's no cost. Thanks, guys. Please give a like if you're visiting in YouTube. I appreciate you visiting the TraderLab. Build a plan, build sustainability, find out what you might be able to do to change your outcome if you don't have a sustainable process. Take advantage of TraderLab while it's still here. It's going on 4 years or maybe a little longer now, and I'm kind of getting down towards, you might say, the gas in the tank is starting to run a little low. So if you find this interesting, use the link down there. Look forward to meeting you in TraderLab. Thanks, guys. Have a great day. Thank you so much for spending your time with me today. Hope you got something out of this. This is the TraderLab, and it's here for you, and there's no cost. Take care, everybody. Look forward to seeing you tomorrow. And remember, the markets close on Friday in observance of the Good Friday holiday. See you later.